Hello and welcome, I'm Suyash Maheshwari and you are watching Last Tick here on News 9, where we bring to you the lowdown of the day's action on the Lal Street. And Indian markets, they ended sharply lower on Thursday, with Nifty even breaking below the 22,000 mark for the very first time since April 19. Remember, the session was expected to be volatile today because, today was a weekly expiry for Nifty contracts. Also, we had some big earnings in the pipelines from the likes of SBI, Asian Paints, Bharat Petroleum, HPCL, PNB, among others. But I think most of us were not expecting a 1.5% fall like we'd witnessed today. I mean, on the contrary, the view was that Nifty was nearing a bottom, considering the breadth of the overall market was, improving and slightly shifting in the favor of the bulls. Bank Nifty was not falling as dramatically as it was in the past, 3-4 sessions, and we were seeing some good recovery from intraday lows as well. But as the old market adage goes, expect the unexpected, and that's clearly what happened today. Nifty ended with a cut of over 1.5% to close marginally above the 21,950 mark. The last time we were here was, remember, back in mid-April, when the sentiment was at its weakest. Nifty now has corrected almost, in fact, more than 800 points from its record high levels in this 5-day correction. So as for the levels that one would want to look at, I am personally looking at 21,777, which was a recent low that we made in April, as a next big support for the market. Below that, 21,500 could come into play. This is nothing but the 127.2% Fibonacci retracement level of that entire rally that we saw from about mid-April, from that 21,777 to about the record high of 22,794. So 21,501 is where the 127.2% retracement level is. For all essential purpose, keep an eye out on 21,500. Moving on, Sensex, the 30 share index, also ended with a cut of about 1,000 points to end at around 72,400 odd mark. The broader markets, I mean, yesterday, one of the reasons why I was arguing that we may be approaching a bottom in this market was because after 3-day losing skid, both mid-cap and the small-cap indices bounced back, and the pullback was actually strong. Both indices surged by about 0.82%, and that improved the overall breadth of the markets, with more shares rising than falling. So it made sense that that the momentum was tilting back in the favor of the bulls, but that was not the case clearly, because we resumed selling and the broader markets, they tumbled as well and fell victim to this broad-based sell-off. The mid-cap index ended with cut of 1.85%. The small-cap index fell almost 3% today. And if you're talking about sectors, all sectors barring auto ended in red today. In fact, Nifty FMCG, remember, which was providing support in a falling market, was one of the major drags on the market. The index fell as much as 3%. Pharma, metals, healthcare, these were the sectors that were the worst hit, and they fell somewhere around 2.5% as well. But that's enough from me, because at a time when the market is falling so dramatically, it's very essential that we get our levels correct. Because if you are stuck at the wrong side of the trade, the move could be so swift and so powerful that you get dragged along with it. So for that, let's also bring on board Mr. Amardev Singh, Senior Vice President of Research at Angel One. Sir, thank you for giving us time here on News 9. And I think, at least me, I was tilting towards that market was nearing a bottom. The breadth of the market was improving marginally. We saw some good pullback yesterday from the intraday low. But again, the trend resumed, the bearish trend resumed. We corrected by about 1.5%, even broke below 22,000 mark for the first time since mid-April. What's your assessment of the market now? One, why are we correcting? Because from what I understand, at least in the last few months, it was the global markets that were the pain point for Indian markets. The global headwinds were the reason why we were correcting, because domestically the things were looking, at least we were in this Goldilocks sort of a situation. But global factors, I mean, they are anything but healthy, but it's domestic factors that are at play. What's your sense at this point in time?
Yeah, a very good evening, and thank you for having me on the show. So, as you rightly said, that markets are always driven either by global factors, domestic factors, or a combination of both. And there again, we've got some of the factors which are playing out, like the US president talking about stopping arms supply to Israel, talking strongly on that. Apart from that, we've seen some crude oil prices cooling off. We've seen some metal prices also cooling off. But in India, if you look at, and we look at the India VIX and the US CBOE VIX, you see a big variance there. So that clearly tells me that it's more to do with the domestic markets and also the way India VIX has moved from the lows of almost 10 to close almost 18, above 18. So that's a significant 80% increase in India VIX over the last 10 to 12 trading sessions. So what it implies is that the investors, be the domestic or the international, who are invested in India or who are looking at investing in India, they seem to have some concerns, and primarily I would say that would be more related to the elections which are happening in place as to what would be the outcome. So they would be lightening their positions, they would be taking some profit, because the way we have witnessed a rally across all sectors, be the small cap, mid cap, or large cap, though limited stocks have really performed. But in terms of small cap, mid cap, we've seen significant rally there. So profit booking also is part of the markets, and that's what we are witnessing there today. Look at the global markets, we didn't see much of a sell-off the way we have seen in India. But technically, if you ask me, what we see is that the markets are witnessing some sort of correction there. And if you go back to on 19th of April, Nifty had made a low of 21,777. If we go back further, on 20th March, Nifty had made a low of 21,710. So these are levels where Nifty is likely to find support. So I would say that a crucial and major support for Nifty somewhere around the 21,600, 21,700 zone. That's a very crucial support zone. As far as the immediate level of resistance is today's high, so 22,300, 400, that's a zone of resistance. So what's likely to happen is, if Nifty bounces back, we'll see bouts of fresh selling coming at higher levels. So we would see that. And also, if you look at the structure overall, the intermediate term structure for Nifty is more or less, I would say, flattish. So in that sense, that there's some sort of correction happening there. As far as Bank Nifty is concerned, Bank Nifty is still comparatively better placed as compared to Nifty. On the weekly charts, that's on the intermediate term trend, but on the short term trend, Bank Nifty is also witnessing some sell-off. And on the downside, Bank Nifty would have crucial support coming around the 46,600 to 46,800 levels. So almost 700, 800 points from the current levels where Bank Nifty would have support. So it's majorly where we could witness that any pullback would be is likely to be used as a shorting opportunity for most of the traders till we see some consolidation happening and a bottom being formed.
All right, the texture of the market still leaning in the favors of the bears. I mean, any rally from here or any pullback to perhaps 22,300 could, lead to some further selling from here on. But you mentioned, India VIX rising, and I mean, it reminds me of the, back in 2019 also something similar happened. India VIX during the voting phase at least surged by about 50% and Nifty dipped. We are witnessing something very similar this time around. India VIX has jumped by about 80%. Nifty is dropping, but also right before the results were out, Nifty surged by about 3.5% if my memory serves me right. Can we expect something similar this time around, considering that the market has corrected quite sharply, sir?
I would say markets are the way they are actually, because if you're looking at event-driven market movements, so that's always a tough call because the actual outcome of the event is what the markets. So there's a lot of guesstimates that are there that what's the likely tally to be, how comfortably the government is going to be formed, or where there could be concerns and all that. So the markets are definitely factoring in. That's the reason we are seeing this sort of lightening of positions. I would say that the market overall, if you look at the market structure, that still remains long-term positive, but from a short-term, intermediate-term perspective, we've seen that investors also are looking at lightening their positions wherein they're having profits. They're looking at, okay, let's get out, let's book some profits and re-enter at lower levels given the opportunity.
Alright, so we enter at lower levels when, maybe the dust is settled, we have some clarity as to what the tally is going to be. Sir, but please hold that thought. We'll come to you right back, but it's time to slip into a very short break.
India produces between 1,500 and 2,000 films every year, the highest for any country, but they get ignored at international awards.
The Oscars are basically American national awards for themselves.
You're not going to be able to make a better pizza than an Italian chef. You're not going to be able to make better sushi than a Japanese chef. Will you make better khichdi than a Japanese chef? Right? So I want you to taste my food. We are making cinema that we are proud of.
In fact, it has been 2 decades since an Indian feature film featured in the Oscars International Film category.
All these years, for much of its history, they've been just awarding their own films, and this one tiny category, Best Foreign Language Film, had the entire world frothing at the mouth to get into the Oscars.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Classic here on News 9, and apart from this turmoil, as this correction that we are witnessing in the market, remember the fourth quarter earnings season is on, and we had some big ones today, the likes of SBI, Asian Paints, PNB, Bharat Petroleum, to name a few, have reported their numbers. Let's start with the biggest of them all, SBI. India's top lender, SBI, reported very healthy set of numbers for the quarter ended March 2024. SBI reported a net profit of 20,698 crore in Q4, registering a year-on-year growth of 24%, buoyed by robust demand for loans. The figure was significantly ahead of analyst estimates that pegged net profit to come in at about 13,400 crore. The lender's net interest income, which is the difference between interest earned and interest paid, jumped 3.1% YOY to 41,655 crore versus the expectations of a marginal 0.7% rise. Furthermore, SBI's gross non-performing assets reduced by 54 basis points to 2.24% from 2.78% last year, and net NPA declined by 10 basis points to 2.57% this time around from 0.67% in the previous quarter of the last financial year. What's more impressive is that the difference between gross and net NPA is at its smallest point in 36 quarters, which indicates strong provisioning and improving asset quality. The state-run lenders' loan growth was strong in the March quarter, and it clocked one of the best growth in over 8 quarters. Meanwhile, provisions nearly halved to 1,609 crore from 3,315 crore in the year-ago period. SBI has also declared a dividend of rupees 13.7 per share for FY24. As for the stock, right after the results were announced, the stock surged as much as 3% to hit a fresh record high. However, it paired gains and closed about 1% higher in a falling market. Remember, the market had corrected, it corrected by about 1.5%, but SBI still managed to close in the green with some modest gains. Amar, sir, coming to you. What's your assessment of SBI's Q4 report card, and what should investors do post earnings, considering that the stock has been a good, or at least has been on a good run in the last 5-6 months?
Yeah, I would say if you look at the stock year till date is up by almost 27-28%. So the returns have been, I would say, stupendous or spectacular for investors who had the courage and the patience to hold on to SBI. Because if you look at the banking space, the private sector is dominated by HDFC Bank, ICICI, Axis, Kotak. Some of these on the public sector, it's primarily the SBI, and then you have the other banks. So SBI plays a very important role, and it will continue to play a very important role in the overall Indian banking scheme of things. And looking at the numbers also, if you look at the quarterly numbers, they've in terms of the net profit, that's exceeded expectations. If you look at the gross NPA as well as the net NPA, that also has marginally declined. So the gross NPA came at around 2.24 versus 2.78 for the same quarter last year. And net NPA also has come down, and also the bank has witnessed strong loan growth. So if you look at its clock, one of the best growths in the last 8 quarters. So having said that, if you look at the company or the bank per se, we see that current levels we are witnessing some sort of consolidation, some sort of profit booking. The long-term trend definitely remains positive, but I wouldn't recommend fresh entry at the current levels. But those who are long, they can look at booking at least part profits and trading the rest. Because if you look at the stock, we see that somewhere on the downside, the stock has got strong support zone around the 720, 750 zone. So, so one can look at booking part profits and trading the balance below this level.
All right, that's a word coming in on SBI. Book some profits now. The stock has done fairly well, 27%. It has returned for its investors just in the first few months of 2024 alone. But what's not doing well is Asian Paints. Asian Paints also reported its Q4 report card, and on the other hand, unlike SBI, it reported dismal performance in the quarter gone by, missing street's expectations. India's largest paint maker recorded a 1.4% year-on-year rise in net profit to 1,275 crore from 1,258 crore in the year-ago period. Revenue from operations for the quarter came in marginally lower at 8,730 crore, declining by 0.06% from the year-ago quarter. The decline in revenue was due to weak demand conditions and down trading in the premium segment. Now, down trading is a practice of a consumer switching from expensive brands to cheaper alternatives. Moving on, earnings before interest, tax, depreciation and amortization, which is EBITDA, for the quarter missed estimates once again and came in at 1,692 crore, dropping 9.3% on a year-on-year basis. EBITDA margin, on the other hand, narrowed by about 170 basis points during the quarter gone by to 19.4%. Needless to say, the street was disappointed by the poor performance of Asian Paints in March quarter, and the stock plunged 4.5% to hit a fresh 52-week low. Amar, I'll come to you. I mean, Asian Paints, at least from what I remember while I was growing up, it was one of the stocks that everyone would recommend. I mean, for most years, it would outperform Nifty than underperform it. But in the last 1 year, it has not done much. In fact, it has given negative returns of about 10% or so. Considering, historically, it has been a wealth creator, and it looks like the sentiment is at its weakest for Asian Paints, will it be a good time to enter if one is looking for a long-term investment horizon?
So see, as you rightly said, Asian Paints has been one of the consistent, there have been consistent stocks. So Asian Paints definitely has been one wherein investors have reaped rich rewards in terms of buying and holding this stock. But as you rightly said, we've seen the stock underperform over the last couple of years, and also this year till date, the stock is down by almost 20%. And if you look at the numbers also which have come, they seem to be tepid from that perspective. And also, if you look at the demand conditions, that continues to be, I would say, somewhat peaking off. And also in the premium segment also, there has been some sort of, I would say, decline. So if you look at the stock per se, I wouldn't say one should look at buying at the current levels, because the way the stock has corrected recently on significant volumes. So that tells me that the stock could further correct towards 2,600 odd levels. That's a level where one can look at. One should never try to catch a falling knife. So if a stock is correcting very fast, you should rather wait for the stock to consolidate and then see if there is some decent volumes beginning to form around those levels. So today has been, I would say, the sell-off has been on extremely high volume. So that tells me that we'll have to watch out for whether this is the low or this is the short-term bottom for Asian Paints, or it continues to fall further. So if today's low is taken out, then the stock is headed towards the 2,600 level. That's going to be a very crucial zone of support. There, if it consolidates, then one can look at buying opportunity. But otherwise, medium-term and long-term trend still remains quite negative for Asian Paints.
Right, Asian Paints still not inspiring much confidence. That's a word from Amar Deo Singh. So please stay with us. We have plenty more to discuss with you. But for now, it's time to slip into a short break.
I try and convert almost everything in a kind of a mathematical formula.
You should always stretch more than you can reach.
Listening is very important.
Because if you don't listen, how would you know what the problem is?
Everybody who's working in and around me, their personal well-being is also responsibility that I carry.
Great leaders have shared vision.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
How do you fulfill that promise? Because ultimately expectations have to be met. If you look at the political landscape, is it really changing for women? And what is the inability of the forces that dead bodies surface but not the living people?
Film and entertainment is definitely one of the levers for any country to build its brand.
We are getting global. I feel that we're just on the takeoff.
More and more films are becoming language agnostic.
Content is a universal language.
There's one audience in the world.
Absolutely. End of the day, we all are like brothers who have mutual respect for each other from a different land.
Watch Allu Arjun on Dual Lords with Barun Das. Streaming on News 9 Plus.
Welcome back. You're watching Last Week here on News 9. Shares of gold financing companies, Muthoot Finance and Manappuram Finance, came under heavy selling pressure today after RBI reportedly sent them advisory letter limiting cash disbursal of loan. The central bank has reportedly asked both NBFCs to strictly adhere to the Income Tax Act provisions on cash disbursement and said that no NBFC should disburse loan amount in excess of rupees 20,000 in cash. The advisory is being viewed as a warning to gold loan NBFCs to abide by the rules. Remember, earlier this year in March, RBI had banned IIFL Security Finance from disbursing gold loans for violation of cash disbursal norms, among other issues. Amar, I'll come to you. I mean, what do you think will be the impact of this on the earnings of these gold financiers? From what I understand, the rules, the implementation of these rules could impact their AUM growth, especially for the ones focusing on small ticket loans in rural area. What's your sense of things?
Yeah, I would say since these many of these companies, they focus on gold loans, and gold being a very safe haven asset, which is, I would say, one of the most liquid of all assets you can, unlike many other asset classes, this is something which is very easily saleable and also has value. And people also tend to connect with gold very well. So this is something of a business which has been there for very long. So in case these restrictions are there and which appear to be there, so that would have an impact on these low ticket, I would say, loans as well, because a significant chunk would be coming from that segment as well. So yeah, and we are seeing that reflected in the share price as well. The way Manappuram Finance has corrected over the last few days, today's down almost 8%, and overall this week is down by almost 16%. So that tells me that they are definitely feeling the impact of the pinch, or the investors are also of the view that this could have some impact on their overall, I would say, profitability and as well as the overall revenue model.
All right, could have impact on their overall profitability and revenue model, and we saw that reflect in stock prices. Both stocks corrected by about 4 to 8%. But we'll shift focus to Paytm because it is making headlines once again. Paytm was in the news again today after report made round that the fintech major is entering ride-hailing sector by offering auto rickshaw rides in cities like Delhi, Bengaluru and Chennai through ONDC network in a bid to challenge a duopoly of Ola Uber in the market. Now, according to reports, the ride-hailing feature on the Paytm app is still in a testing mode and is only visible to a few users. Amar, coming to you, I mean, Paytm has been making headlines pretty much on a daily basis. The stock today was logged in a 5% upper circuit. Prior to this, it was on a 10-day losing skid and even hit a fresh all-time low of 317 apiece. I mean, this was, I guess, following the resignation of CEO Bhavesh Gupta. Any opinion on Paytm? Is it worth looking at current valuation, sir?
I see this is one stock which really has, I would say, for various reasons, disappointed investors in terms of returns, and it has been a wealth destroyer for most. And the way the stock has corrected, if you look at this year itself, the stock is down by almost 47-48%. So if you look at the stock, there are many factors which are really playing upon the stock. Some of them are regulatory factors, some are market-driven factors. So what we are seeing right now is some sort of interest, definitely, because if you look at the overall volumes and the delivery quantity of the last 4 or 5 trading sessions, we've seen that increase significantly as compared to the last maybe 20-25 trading sessions. So that tells me that there is some buying that's happening, but it's more of a risk-taking capacity and risk-taking ability for those who want to look at the stock. Because if you look at in terms of multiples, at a point of time, the stock used to trade almost 2,000 levels, and now it's around 330. So the stock is down significantly by almost 1/6 from where it used to trade at a point of time as per the listing. So there would be people who would be looking at this from maybe a risk perspective or an opportunity perspective, but that would more depend upon the appetite of the individual. I wouldn't recommend at the current levels.
All right, Amar Deo Singh wouldn't recommend Paytm. If you have a high risk appetite, maybe look at it, but again, it's a speculative bet. Remember that, keep that in mind if you are betting on Paytm. Sir, always a pleasure speaking with you. Thank you for your insights and giving your time here on News 9.
Thank you for having me.
But that's all we have in this edition of Last Week. We'll see you tomorrow at 9:45 AM on First Take. Thank you for watching.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known that I'm going to win.